If you had put 20,000 US dollars in Airbnb back in 2009, today you would be set for life. But you did not, and many of you secretly regret this loss. At that time, you might have laughed and thought, who will gonna rent out their couch to strangers? But this is the point. We often dismiss opportunities as too simple, while those who spot them early take the bet and end up insanely wealthy. So the real question is, how will you spot the next one before anyone else? We are living through the same kind of moment right now in 2025. Everyone wants to be successful, but how? Are you waiting for the next Airbnb? Well, welcome to another video. I am Niklas, Managing Consultant and CEO at spectup. I help startups to raise capital and design their strategies so that they can go to market successfully. And because I also scout for VCs, I'm sitting on both sides of the table. I will be sharing the insider points and stories so you can understand what really drives fundraising and investing success. So if you want more behind the scenes access to the startup world, make sure you give this video a like and hit the subscribe button on my channel below. It helps you to stay ahead and it helps more people to find my very new YouTube channel. So now just one quick question before we move on. If you had 10,000 US dollars right now in 2025, would you put it into AI, climate tech, health tech or anything else? Drop your answers in the comments. I'll be reading and replying, and I'm curious to see where you will place your bet. Now coming to the video. How to become a startup investor. Most people think you would need to become a millionaire or sitting in Silicon Valley to start investing into startups. That is a very common thought circling around. But here is the twist. Some of the world's most successful investors I know, they started with as little as 5,000 US dollars. And here is the funny thing. Most people don't even try because they believe three big myths. Myth number one, you need millions to start. Not true. Many angel groups accept checks between 5K or 10K US dollars. Myth number two, only venture capitalists can invest. Nope, platforms now let everyday people invest alongside VCs. And myth number three, it's all about luck. I have seen founders raise millions from just angel investors who simply knew how to spot signals. So no, it's not about luck. It's about knowing what to look for. Congratulations, we have successfully busted all three myths. Let's get practical. You might be having many questions. So where do we even begin? You have got many options to look for opportunities and where you can start your startup investing journey. Platforms like Cedar or AngelList. Angel groups in your city. Or if you want to go deeper, you can become a venture scout for a venture capital fund. But first of all, let me ask you, would you prefer to invest quietly in a startup through a platform or sit across the table from a founder, helping shape their vision? Being a great investor isn't about having the fanciest MBA title. It's about curiosity, about being able to read people, about spotting founders who are hungry and resilient, about finding the gaps that need to be solved. Now let me give you one more example. Right now, millions of people are aging. And by 2030, there will be more elderly people in history than ever. Most of us don't really think about that. We laugh off ideas like elderly services or say they are boring. But here's the truth. This gap in elderly care is massive. Think about it. Simple solutions like better home assistance, smart health devices, or even community-based services could become the next billion-dollar startup. It's just like Airbnb back then. People mocked the idea of renting out couches to strangers. Today it's a 100 billion US dollar company. And the investors who saw that idea early, they cashed out very big. And that is why the smartest investors look at where society is heading to. And right now, elderly services are one of the most untapped areas globally. Now you might be saying, what is, Niklas, if the startup has no traction? Where is the evidence? I once saw an investor who backed a startup team with basically zero traction, but their drive was unstoppable. So guess what? The startup ended up raising a multi-million-dollar round. At the end of the day, you are betting on people, not on spreadsheets, and also not the business in general. But we all know that 2025 is changing. There are things that are transforming in just seconds. So let's talk about what is hot right now. AI is everywhere. We have seen that, but here is the catch. The bar is higher than ever. Investors don't just want hype, they want real traction. Climate tech and sustainability, it's also exploding. Regulations are forcing industries to change, and investors are pouring in. Health tech and longevity still growing strong. But in all this, something has changed. Investors are being cautious. Writing smaller checks, doing more due diligence, which means again stronger business models will win. Now you might be questioning me how to know how much is a startup worth. And that requires a sharp mind. When you're looking at a startup, here are my 3 steps. Number 1 is market size. Is the pie big enough? Number 2, founder market fit. Do these founders live and breathe the problems they are solving? Number 3, traction. Even small signs of growth, like user adoption or partnerships, can really mean a lot. I worked with a startup that had 0 revenue, but the early signs of traction, they were there. Investors saw it, believed in the founders, and then also invested in that round. That happens. So traction doesn't always have to be money. Bet on the consistency. Find the hunger to solve problems. Here's the part most people ignore. Startup investing is super risky. A lot of startups will fail, and this is totally normal. So the trick here is don't put all your eggs in just one basket. Spread your bets across 10 to 20 startups. This isn't just like stock trading. But the good news here is that just one good investment can cover all your losses. So what should you do next? I would suggest starting small, joining a couple of investment communities, joining an angel group, or just start watching deals to learn. Start building relationships with founders, but also with other investors. And if you are not ready to write checks yet, consider becoming a VC scout. It's a way to get access to deal flow without capital. Meanwhile, you can learn and grow. So if we close up, startup investing in 2025 is more accessible than ever. You don't need millions, you need curiosity and patience. Focus on the people and not on the numbers. And watch the trends. AI, climate tech, health tech is where a lot of action will happen in the next couple of months and years. So let me flip the script. If you like this video, please like and subscribe my channel, because what we just covered was only the mindset and the fundamentals of startup investing. But spotting opportunities is only half of the game. The other half, actually finding those deals and knowing how to evaluate them. If you want the full breakdown of sourcing and due diligence, I will be making a part 2 and maybe even a part number 3. So stay tuned, and remember, founders may launch the rocket, but it's the early investors who will ride it to the moon. See you in my next video. Thank you and goodbye.